Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, as demand exhaustion continues to sweep across the nation, it is putting overwhelming pressure on both price and inventory, which, as you guys know, is in desperate need of some relief. Now, although it's late, better late than never, because relief is on the way, and now we are starting to see an overwhelming amount of signs that is clearly demonstrating that the housing market is quickly turning from a seller's market back into a buyer's market. And what that means for me and for people like me that are waiting on the sidelines to find something that they love at a good deal is we will be rewarded for our discipline and for our sacrifice. So all good news, you guys. And what we're going to do today is we're going to take a look at a Redfin article that's titled "Demand for Vacation Homes is Now Below Pre-Pandemic Levels." Now, obviously, you guys, you know I have been screaming to death that what is really important as far as comparing the data right now is to compare the data that we're receiving right now to what was happening before the pandemic. So all of these year-over-year comparisons or these month-over-month comparisons, they can be good. They can show the trajectory of trends. But really what we want to see, y'all, is things getting to where they were or even worse than pre-pandemic. Now, does that mean we're going to get inventory that is above pre-pandemic? I believe so. And I also believe it's possible that that happens this year. And I'm going to go more into that on my Thursday housing market update. I'm actually going to show you what the new results are for June active inventory. And you guys, I don't know how I'm getting this information accurate, but I was spot on my estimate. Either way, you guys, let's jump into this article right now and let's review another set of data that is pointing to all signs housing market crash. Take a look at this. High home prices and mortgage rates, along with economic uncertainty and an increase in second home loan fees, have put an end to the pandemic-driven vacation home boom. Demand for vacation homes has fallen below pre-pandemic baseline for the first time in 2 years, with mortgage rate locks for second homes down 4% from before pandemic in May. That's down from a revised rate of 3% above pre-pandemic levels a month earlier and 70% above pre-pandemic levels a year earlier. So here's the thing, you guys. I've been hearing a lot of information about how the loan fees are now higher for second homes or investment homes and things of that nature. But here's the thing. They've always been higher for a second home or vacation home versus a primary residence as far as the lending fees and the lending costs. So I'm not sure why they're pointing that out so much because it's always been like that. But again, you guys, here's another data trend as far as demand being absolutely crippled. So we're now under pre-pandemic levels as far as the demand for vacation homes. Now, that is an especially big deal if you live in Florida. Florida has one of the most out of control housing markets right now for second homes, Airbnbs, investment properties, basically all things that are not primary residence. So I have a lot of commenters and a lot of subscribers that are in Florida right now that are actually fully aware of the mass migration to their state. So if you're one of them and you're listening to me right now, you guys, don't worry. The trends will get to your housing market. No housing market is immune to a crash or even a recession, cool down, whatever we want to call it. It's coming to Florida, y'all. It's going to take longer, in my opinion. It's going to lag behind many other metro areas because of the overwhelming demand specifically in that area. But again, you guys, rest assured, things are changing. There is proof all over the place. Now, the question is going to be, how far do home prices go down? And will they go down far enough to where most people consider them affordable? Here's the thing. No, because the moment that happens, the moment people start seeing things affordable again, we're going to lose inventory. So what I think is going to happen is once our inventory balloons up, which can happen this year, okay, I believe that it is possible to have more than 1 million active listings by the end of this year. Now, if that happens, what also may happen is the Fed might flip-flop, make things more affordable again. And it's during that window where we're going to get a tremendous amount of buyer demand again, and we're going to start losing inventory once again. So it's going to be very interesting to see going forward how the Federal Reserve starts steering the boat. And that's going to be especially interesting in 2023, when I believe is going to be some of the best buying opportunities. Now, obviously, you guys know I want rates in 9%. The higher the interest rate, the more pressure it is on prices and inventory. Let's get back to this article right now. Now, take a look at this chart from Redfin, y'all. This is demand for vacation homes, and it's saying it fell below pre-pandemic levels in May, which is right here, okay? Now, here's what I want to show you. Look at how normal demand usually goes, okay? So it's a gradual increase, demand for vacation homes. It's very modest. This is from 2015, so it went well for a very long time. Look at this. And then look at what happened here, lockdown. So when lockdown hit, everything went down. As soon as we opened lockdown, and here's the problem, lockdown and more stimulus. Lockdown, more stimulus. And this right here is why we have that problem, right? But, as the Federal Reserve started doing, quantitative tightening and lowering, and increasing federal funds rate, as you can see, the demand is plummeting. Because again, you guys, supply really doesn't matter if there's no demand. Although supply is super important. I'm not saying it is, and we need more supply, but I'm saying the Federal Reserve is eliminating demand for millions of people. This is astonishing. So this is going to continue to go down. It's going to be very interesting to see how much this goes down exactly, but it is another refreshing sight to behold, especially if you're stuck in Florida trying to buy a house and you see no end in sight as far as the bidding wars and outrageous overvaluation. How many data sets can I show you? How many data sets, right? But again, the question is, how affordable will housing become, right? Right now, everyone knows drastically unaffordable. Now, with the crash, right, say housing value goes down, will it go down enough to make it affordable for most people? Will there be laws in place by that time which prevent institutional investors buying the supply, right? Will all of that happen? I hope so. I really feel it really depends on our administration and on the Federal Reserve, because quite frankly, they could do whatever they want. They can drive us into any direction. So although I'm right on a lot of my guessing, right, because there's no crystal ball here, the Federal Reserve and the government can change things at any minute, which is why it is so especially important to prepare yourself. And a lot of people say to themselves, they can't compete with institutional investors, but that's wrong. You absolutely can, because institutional investors are only responsible for maybe 15% of the houses, right, in the entire nation. So you absolutely can. But the thing is, you also have to change your attitude, right? You have to have the right mindset, okay? Improve credit, improve your savings, improve your income. Those are the three things: credit, income, assets. Let's move on into this article right now. Okay, guys, this is a bit longer of a read. That's according to a Redfin analysis of Blvd. A mortgage rate lock is an agreement between a home buyer and a lender that allows the homeowner to lock an interest rate on a mortgage for a certain period of time, offering protection against future interest rate hikes. Home buyers must specify whether they are applying to secure a mortgage rate for a primary home, a second home, or an investment property. We define pre-pandemic levels as January and February of 2020. Is it January or February? Which one? So just say January. Demand for second homes is declining due to high home prices, mortgage rates that have rapidly risen to nearly 6%, and a slumping stock market. Factors that are also cooling the rest of the housing market. Another deterrent to second home buyers is the fact that the federal government increased loan fees for second homes in April, adding roughly $13,500 to the cost of purchasing a $400,000 home. Skyrocketing monthly payments along with higher loan fees have priced many second home buyers out of the market. Many would-be second home buyers are also deterred by turmoil in the stock market, high inflation, and recession fears that can be quicker to pull back from the market because vacation homes aren't a necessity the way primary homes are. The cooldown in the second home market is likely to continue as long as mortgage rates are elevated and the stock market is slumping. The drop in vacation home demand marks a drastic change from the second half of 2020 and 2021, when mortgage rate lock for second homes skyrocketed due to record low mortgage rates and the flexibility to work from anywhere thanks to remote work. Demand peaked in March 2021 when it was about 90% above pre-pandemic levels. Interest in vacation homes started declining sharply in February as mortgage rates began their ascent. The average 30-year fixed rate mortgage reached 5.78% in the week ending June 16th. So you guys, I want you to listen to that and realize that the Federal Reserve has only just begun. Okay. They've taken a couple stages forward. So it's not necessarily at the beginning, but it's basically at the beginning of the measures that they plan on taking to get ahead of the runaway inflation. Yes, we know it should have happened in 2021, but better late than never. So what they're doing, you guys, is working. This is absolutely beautiful. It is undisputable. And here's the other thing: Jerome Powell is telling us what he's going to do. So you can't really miss the writing on the wall. So in other words, you guys, all of this data that I'm doing, all of this reporting that I'm doing, I hope it's exciting you and motivating you to continue to sacrifice, self-empower, and educate yourself on how to become a homeowner and to get good terms on something that you love, right? So that's why I'm sounding the alarm. Don't buy something overpriced that you hate, that you're probably going to be upside down with at the end of this year. Stop doing that. Start learning how the housing market works, because I'm showing you, right? I'm sharing with you my opinion. And by the way, you guys, for my effort, please like this video. I definitely forgot to say that. Like this video, subscribe if you haven't already, comment below. You guys know that I try hard every single day to get you a video, but also remember, I'm not your financial advisor, even if I want to be, but my bio is as a realtor, loan officer, and instructor in Texas. So I absolutely love real estate. So I'm trying to share with you guys. I'm trying to empower. I'm trying to give you guys education. I hope you love it. I hope you're learning, and I hope you're growing. Now, if you're out there investing in real estate, I do wish you luck, and I hope you win.